Turnaround situations can make or break your portfolio. It can make you 10x, 20x, 100x also if you play it in a right way, or it can fail miserably if you don't know how to play this cycle. And that is what is the powerful motive of this video, to help you understand how to play turnaround stocks, how to play these special situations where there is shift in the management, there is a turnaround that has been done by acquiring a painful company, and that can give you crazy returns if you play it in a right way. So if you are ready to learn about how to create this kind of turnaround stories in your portfolio and play it in a powerful way, let's get started, and I'll teach you exactly how to do it with powerful case studies, lot of live examples which I have been investing in my own journey with practical insights, and this video is going to be mind blowing. So please make sure you are staying till the end, taking a lot of notes and going deep dive inside this video. Let's jump in. Awesome. So this is the story of turnaround situations. What is turnaround? Turnaround, as the name suggests, we are trying to find a company which is in pain, and that is getting acquired by a very, very powerful, strong management, and they are making all the changes which totally changes the scenario of the company. And let me share the PowerPoint, and we'll go deeper into this, and I'll be sharing a lot of case studies so that you can understand these ideas in a powerful way. So let's dive in, and I'll share my presentation here. The first thing we are going to just understand is the disclaimer. Some of the stocks which I'm going to discuss, I might be holding it because I believe in having skin in the game. I don't preach what I don't do myself. Okay, so that is the reason you might have something where I might be having stake inside some of these companies. So what are the triggers for these events? One is poor performance of CEO. It might happen that the company is like literally burning when things are not going fine. Okay, there is a lot of poor performance of CEO. There is a board pressure and CEO gets fired. It could be because there is a leadership transition, or there are strategic moves, just like there is some kind of consolidation, there is some kind of activist, or there is strategic acquisition. Now there are three parts in which the business turns around. It's like a hospital recovery analogy. What happens first is the company is in a deep trouble, and that is where you need an ambulance to rescue, and you need somebody to take charge of the company. That is the first part, where you are in a emergency room situation. Now once you are taken into ambulance, there is a second stage which is more like ICU monitoring. You need to be in a ICU. That's where company is very, very critical. If not handled properly, it can even fall apart. And the third stage is a general ward, when the company recovers and all the critical risks are over, and then you are like monitoring it closely in the hospital, but there is not so much of risk as it was in ICU. So with this analogy, we will be learning about turnaround stocks and how to think about turnaround situations. So let's think about the first part of it. When it is in ambulance, like what is the stage of ambulance or the crisis situation? So in this crisis situation, you have sales which is not growing. That's the first big trouble where company goes into, where its sales are not growing. And because of sales not growing, you have a lot of cash flow issues, and you are squeezed from all the side. You have to pay your suppliers, you have to service your customers, you have to pay salary to your employees, but because the sales is very low and it's not growing, you're not able to do all those things. So you are tight on cash flow. The profits are almost missing, or you are into losses. So negligible profits, or very tiny profits, or even big losses in the portfolio. And your lenders are worried. People who have given you debt, they are worried that what is happening with this company, whether this is the right company to put my things, and they feel this is so much risky. Okay, so they even sometimes start offloading some of these debts, or put more pressure to company to give more equity, and so on and so forth. and investors are losing confidence. Investors are seeing red and the stock price is like falling, and they don't want to put more money into the company. So there is a lot of negativity when it comes to the investors also. And the top executives are getting fired because they are not able to turn around the business. They are not able to get more revenue for the company. So this critical stage requires immediate attention, immediate intervention, because if that is not done, the company can deteriorate beyond a critical point. It's like, ambulance not reaching on time and that person can also die. That's what can happen to the company. That's the first stage. So if you all of you are clear on the first stage, just type super clear, because I'm going to go really deep so that whenever you find a similar situations, you will be able to grab the opportunity and you can play it with lot more confidence. Okay, so let's go deeper. Let's go into the second stage. Now, what is the second stage? The second stage, as all of you know, is more of a ICU monitoring. So now let's say there is a company which has got some attention, but now there is a lot of things that needs to be done right. Okay, maybe you have changed the CEO or another company is acquired, but you need to deep dive into receivables and collection, that what has gone wrong, why my cash flow is strained. I also want to convert my pen piling inventories. There might be a lot of inventory which might be piling up for me. I want to change that into cash so that I can free up some of the cash. There would be top leadership review. If somebody is not executing the strategy, probably they are replaced. You want to also start talking with your lenders that, hey, you have given me money, but it might take time. We need some more reshuffling of the debt situation. We need some more time to repay it to you. We need some restructuring in our payment plan. All those things gets discussed, and the management then starts becoming transparent. They say, hey, this is the situation, we are in a critical condition. They also tell to shareholders that, hey, give us some time, we need some operations to be done. The situation is very critical, give us some time. And they also take tough decisions, just like when we get operated, some of the bad parts we have to remove. And same way, the units which are loss making are shut down. And the hints of restructuring, that hey, we want to make this right, and then we want to restructure this entire business, we want to turn around this business. All these discussions starts coming out. So the company is stable right now because a lot of these firefighting has been done, but still this phase needs extremely close monitoring before the signs of real recovery happens. Okay, so this is the second stage. The third stage is recovery. So you have sold out your non-core assets, you have got some money out there, you start shifting your product in such a way that you get good margins. You have put in some equity infusion either through investor or through acquisition. Your receivable starts improving, your cash flow starts showing up, you have got a better credit situation with your suppliers. You see some initial signs that margin is recovering, and then you also do some initial investor interaction, and you do con calls, and everything starts doing fine. So during this phase, the company shows clear sign that we have now stabilized, we are out of the risk. The first hints of EBITDA positive or margin getting proper, that gets started. Okay, and I'll share a powerful case study of a company called CG Power for this. Now, CG Power, this was started with as a Thapar family. They expanded into paper power. So when there was good times, they expanded like crazy. And then the trouble started. They created this early group called Avanta Group, and they had flagship businesses like Built and CG Power. And it has a century old history. Like 1919 they started, and Thapar family grew from time to time. But sometimes the ego takes over. There is a unnecessary diversification across multiple businesses. There is no control on cost, there is no control on whether they are strategically investing or not. A lot of non-core areas that starts coming in, and that is exactly what happened with these businesses. So in CG Power, what happened is suddenly the sales started stagnating. You had investors that came into panic, and stock becomes extremely vulnerable. And I'll show you what happened in CG Power. So if you see this phase, like from 2016 to 2020, the profits were dwindling, like from negative 461 crores, it went all the way around to minus 1300 crores, and COVID was another reason. And that way investor lost confidence into the company, and there was a lot of troubles out there. So that was a particular stage 4 emergency room kind of situation. And then, you know, not any investors actually took interest that time. You know, new management then started coming in, leadership review became, some of the early smart fund managers started entering into the stock consolidated for a very very long period of time. And then there was trigger where the Murugappa group took over in 2020, and they started recovering the company. The company started showing growth of revenue. The margin started improving, the debt started going down, and there was a crazy price volume action. So if you see CG Power's chart, there was some amazing price volume action at the initial stage. That time the company was somewhere around 10 to 15 rupees, and that is how the shift happened. Okay, so I'll just share the screen again and let's see it here. Okay, so this is what happened. There was this initial sign of price volume action back in 2020, and that time it was somewhere around 10 rupees. And from 10 rupees, if you see today, we are somewhere around 600 plus. Okay, so in its own run, from the bottom it has become like 100x. So when Murugappa Group acquired, the things shifted, and then they started doing con-call. And this is where TechnoFunda investors, we start focusing on price volume action. We use tool called as ridewinners.com, where we capture the price volume action, we start studying fundamental analysis, and then we keep adding our position. So the way we operate is, as we get confidence, we keep adding more and more to the stock, and we want to ride this big trend. And I'll tell more about it later in current live case studies, how to go about it. But this is the journey. This is a typical journey. And then late stage 2, when there is some more earnings growth that happens, the boring business now compounds quietly, and a lot of investor attention comes into the play. So what happened in this company? Why the downfall happened? Because they had debt fueled acquisition. So one of the major reason what you will find in most of these companies is they are using a lot of debt, and when they take a lot of debt, they have cyclicity in the company, and when the cycle turns, they are not able to repay the debt. They failed the power venture and paper business which was built, and other power business which they had. They failed miserably there. They caught on the wrong foot of the cycle. The promoter pledged the shares, which means there was a lot of pressure from bankers to turn it around and sell off that stake. There was a accounting fraud that came up, and then CEO was also removed. And in its worst days, you will not believe it, the price actually fell from 225 rupees to 5 rupees in the matter of 6 years. So that was the downfall. And then Murugappa Group came in, they took a controlling stake. That time they took the shares through Tube Investments. They acquired a majority of ownership. They also gave a haircut to the bank. They renegotiated the entire debt, and then they started strong corporate governance into the company, and that was a turnaround point. So they started clean up, restated financials with all the frauds that happened. Then the debt they had reduced by selling a land parcel which they had. They resolved accounting and liability of legal side of the things, and they got the trust of the bank, of the vendors, and the investors. So the first thing what they need to do is fix the balance sheet, and then P&L always follows. And this is what was the result, right? So from negative 1331 crores in next 4 years, they turned profitable, and now they are doing run rate of 1400 crores, and they reduced the debt from 3800 crores to almost a zero debt company. The stock price went from 5 rupees to more than 600 rupees, and the market cap went from their bottom at 300 crores to 90,000 crores. That's the power of turnaround. So if you see from the bottom, which it was not easy to catch by everyone, it was a 300 bagger. So if you spot these kind of businesses, and if it turns around, not every business will turn around. You have to see who is acquiring it and what is their track record in terms of turning it around. Okay, because that allocation you need to do based on the bet you have to take based on what is the past performance, what is the track record. Just like how you are playing poker, you need to understand whether I should take a calculated bet there or not. Okay, so that is how this entire journey works. Now let's go deeper. By the way, this entire presentation, what we are going to do, I'll be sharing the link in the description below in the comment section. So if you want to download this presentation, revise it in future, please feel free to do it. You'll get it in your inbox, in your email, and you can refer it all the time. So this is a link, technofunda.co/turnaround, and you'll be able to download this PPT and you can revise it further. But some of the things I am going to show you live so that you can understand the principles. So just keep watching this right now. Now, what happened to this was a similar case in Usha Martin also. You know, they had wire ropes business. They started rising debt. There was family dispute, leadership instability, and operational efficiency. And then it got took over by Tata Sponge, and it turned around. And there are a lot of such, you know, successful uh, turnaround stories in India where it completely shifted the game. So this is what happened with the entire business of Usha Martin, where it turned around, and if you see, their market cap went up by 20x, almost from 500 crores it went to 10,000 crores, because the balance sheet was fixed and the profit started coming in. From negative loss of 49 crores, they started making around 400 crores profit. Another very big case study in India is Safari industry, where Sudhir Jatia took over a big stake in Safari. He became MD. He saw the opportunity. He turned around the legacy brand, and now VIP is actually struggling. And as we speak, VIP has become a turnaround story, because there was a recent news that VIP also got took over by PE companies, right? And I am holding a position in VIP, initial position, but this is another turnaround story that is happening in front of our eyes. Now, one of the powerful case study, which is a recent case study, is of NSCL. Okay, so NSCL industry was a loss-making company. Like if you see NSCL on screener, you will see like last couple of years it has been into trouble. So from a profit-making company, it went into loss-making company. The losses kept on growing, and all areas, you know, right from sales to margins to, you know, overall EBITDA, they are struggling. And that is where Murugappa Group, the same group which acquired CG Power, they acquired NSCL Industry through its group company called Coromandel International, and they got a, you know, stake of 53% at 76 rupees. Okay, so 76 rupees they acquired this company, and then they triggered the open offer. Their rationale was very simple, because they had a similar company in the similar space. There was a lot of leadership related synergies. They could enter into global CDMO partnership, and they can expand their portfolio and R&D capabilities. So that is the reason why uh, Murugappa Group acquired NSCL Industries. And this is what they shared as a perspective, that what they want to do after the ICU stage. They want to give operational independence, they want to get leadership stability, and they want to turn it around. Now, if you see current situation of NSCL, by the way, I'm also holding NSCL in my personal portfolio, and I'm holding it since quite a long time after the price action started. So in a few months, actually, since even I have purchased it, has more than doubled, but I continue to hold it. I'm playing this turnaround. But this is where again technicals helps you, because there was initial signs of price volume action. That is where I started tracking, and then I went deeper. I did deeper analysis, and I used a lot of chat GPT also. Like I went into a lot of these things. You can check out my video also if you want to learn how to use AI and chat GPT to enhance your investing game. So you can just search with Vivek Mashrani chat GPT. You will find my video on YouTube where I've discussed and I've given a lot of prompts which I use. I've practically gone deeper there. So you can just check that out later on. But this is where price volume action helps. And then I studied it deeply, and then I thought I should buy a tracking position. So around the price volume action when it started, I got it. And as we speak, as I'm recording this video, I'm still holding it. So it's already like more than two baggers since I entered. But what I do in these kind of special situations is I don't go big. I follow risk first approach. So I enter a small tranche, and then as it moves in my favor, I want to add on the way up. And that is what I believe is a powerful way to play turnaround stories, because not every turnaround stories will turn around. Many can fail. It is a high risk, high reward game. But the good part is my risk is maximum 100%, right? And I don't even take 100% risk. I have again my own risk management system. And if you want to learn about this tranching and exit systems and how to enter and how to think about price volume action, I do a separate session which is a free masterclass. You can join this masterclass. You can go to this link, technofunda.co/webinar, if you are not part of my community, and you can attend that session, understand how this entire process works, and you can be part of our community also if you resonate with our value system. Okay, I've given the link also below in the description. You can check it out, but you don't need to enter in one full shot. That is how I believe in playing these turnaround situation. So I always want to go tranching as the turnaround happens. As I see that the company is coming from ambulance to ICU to the general ward, I want to bet more and more and more. It's more like a poker game, right? It's like the same thing. I want to add more based on how my cards are getting played out. If the management is turning around properly, I want to add more allocation to it. Otherwise, there is a big risk. I might lose all my money. My big capital can be at a stakes, right? So I want to follow absolutely my risk management systems, and I want to simultaneously analyze what is turning around fundamentally. Okay, what are the levers they can use fundamentally to turn that company around? So that is how this NACL example we have played, and this is where you have to first ensure that if you are playing turnaround, this is the most important thing. Let me share my screen again and let me share the presentation. So the first thing you need to understand is the time required to turn around could be higher than what you have anticipated. So sometimes it can take lot more time to turn around, and lot more patience is required. So you go slow and step by step in this. There could be a lot of volatility, like even the example of NACL which I shared. There were a lot of lower circuits also that came in. But if you have a fundamental conviction, and if you are taking a risk first approach, you are taking a calculated risk to play this, you should be able to absorb this kind of volatile transition. And even while the company is getting turned around, there could be lot of issues that can happen. There could be a lot of unforeseen situations that can happen which might derail or delay the turnaround. So you should be ready about that kind of fundamental volatility also. And third, and the most important thing in this entire game, is risk management. If you don't manage the risk, if you don't manage your downside, there could be a big trouble in these kind of situation. So you have to monitor it very closely. Even better if you are a part of community where you can collaborate together, you can check what are the different approvals they are getting, what are the regulatory things that are changing, what is happening in front of the debt monitoring and everything. That will be very powerful. And most important in these cases is to focus on the balance sheet first. If they are not able to clean up the balance sheet, there could be a problem, right? So the stages to look for in a turnaround is first the cleanup stage, where they clean up the balance sheet, they reduce the debt, they negotiate with the vendors and the suppliers. Then there is a revival phase where they are showing some kind of cash flows and P&L, and then ultimately it's a compounding phase, like just like how CG Power is right now in a compounding stage. That's the ultimate stage where the company is fully recovered and it's like walking, running, and your money is compounding even after that. Okay, but you cannot chase each and every turnaround. You need to see who is acquiring that company or what is that turnaround situation. it takes a lot of efforts to turn around any company. So please make sure you pick the right stocks, the right management who is acquiring these kind of companies. And I want to share one more similar play which I am tracking currently. Is a similar situation is happening in a company called SML Isuhu. Again, as I speak, I am riding this. Again, initial signs I got with price volume action, and from my initial entry, it has already doubled, and I continue to hold it as I speak. And this is again one more example how a company which was again in trouble, it was making losses, not able to do proper justice to its capabilities. This got acquired by a company called as Mahindra and Mahindra, which is a very strong group, and this is also now turning around as we speak. So when you play these kind of situations, when you play these kind of turnaround situations, it can be a game changer in your journey. And even when market is not performing, like, well, while I speak, last 2 3 weeks the market has not done much, Nifty has been in consolidation, but if you have these kind of plays in your portfolio, then it can really compound your portfolio nicely. Okay, so that is the power of playing special situation. Just from these situations which I'm playing in my own portfolio, the special situations in last 3 months have compounded the portfolio itself, like the special situation portfolio, more than 50%. That's the power of riding your winners, adding as the turnaround story performs, and be extremely selective in doing analysis of turnaround situations. Yeah, so I'm just sharing this just to let you know that there is a lot of power of compounding when you have these kind of plays, and it could be a still big potential. Okay, like plays like NSCL, SML. Again, I don't know how management will turn it around, but if they really turn it around, there could be a lot more potential. And there are a lot of such plays right now available in the market, like we keep discussing inside our community also. VIP is a latest example. I continue to even have a tracking position in this, but there are a lot of other turnaround plays that are happening in front of your eyes, and it keeps coming again and again and again. So if you understand this template which I've shared with you, you can apply this knowledge. It's a permanent knowledge, and you can keep hunting and keep growing your portfolio from these kind of turnaround situations even in future. So that is what I want all of you to take away from this entire video. Just to recap, we discussed about 3 stages. We discussed about the ambulance phase where the company is in a deep trouble, the ICU when there is some revival, some initial firefighting that is happening, and then general ward, and then ultimately the compounding where you are fully recovering and getting to the outside world. And we also discussed some of the powerful traits around how to do it. And I also shared that if you want to get this PPT, you can go to the link which is given. It's called technofunda.co/turnaround, and you can go to this presentation and you can understand more about all these nuances. But let me tell you, these ideas which I shared are not recommendations. These are just to give you an idea of how real time and how practical the knowledge is what I'm giving to all of you, because the knowledge is permanent. The stock ideas will keep changing, but if you know how to play it, you can do it again and again and again. And I've created one more similar powerful video, which is called how to buy strong stocks. You can just search with Vivek Mashrani, buy strong stocks, or you can even search my channel. This is one more powerful way where you buy stocks which are in demand, which has a lot of strength, and that has also helped me, uh, you know, grow my portfolio in a powerful way. And month on month, if you are looking for compounding your stocks, just look for video called how to do SIP in stocks in my channel, Vivek Mashrani, and you will be able to find this. Yes. So that's for today. Hope you enjoyed this entire video. No fluff, no bluff, right straight to the point. That is how I like to do it. If you're not following me on Twitter, just check out my handle. It's called Mashrani Vivek. And I call myself as a TechnoFunda investor, TechnoFunda investing specialist, where I blend technical analysis so that we can find and spot such opportunities early on, and fundamentals to build conviction and ride that story in a much powerful way. So I blend both these things. And again, for risk management, I do use of a lot of technical analysis tools. So if you loved it, just make sure we are connected and make sure you are subscribed to this channel. And let me know if you know any special situation that is happening right now. Comment in the comment section below, and let me know. Would love to analyze that and would love to collaborate on lot of such situations, right? So while you are watching, if you see that these patterns are emerging in any of these companies which you are tracking, please type it in the comment box, and let me also know what kind of topic you want to learn along with this journey, so that whenever I'm doing some research on these topics, I can share it with all of you. So thank you so much again. Take care, God bless, and keep compounding. Bye bye.